I'm going all in on these stocks that I'm going to be revealing in this video. There's a ton of money to be made, an absolute boatload. So this is a very important video that you must watch. I'm going to be covering stocks that I see opportunities in, new stocks that I'm purchasing, old stocks that I believe will continue to run. I'm going to be giving you my general thesis on many stocks within my current portfolio. The first stock I'm going to be covering is AMD. Now, AMD has a market cap of $270 billion, and it's a lot smaller than NVIDIA. I like NVIDIA as well, but what I like about AMD specifically is that AMD is not only smaller, but they also have a kind of a larger roadway, a road map that they can grow into becoming a $1 trillion company. So if they hit 1 trillion, that's a 4x potential from here. So with their AI roadmap, there's a high probability that they can at least, double their market cap from here, if not, quadruple it in the next, reasonable amount of time, 5 years. Quadrupling your money in 5 years is a pretty good return. Of course, in this bull market, it's likely to happen even faster than that. And now they're going all in on AI chips, which are used to train and basically build LLM models such as ChatGPT, Claude, and the rest of the LLM models, which are very big right now, right? Big part of the economy, and a lot of companies are just pouring lots of money, and AMD is part of that infrastructure that these companies have to invest in because they need chips. You need chips to run large language models. There's a lot of compute power that is necessary, right? So AMD, they just launched their chip called the MI350. And I'm telling you, they're going to make bicep over tricep money on their chips in general, whether it's the MI350 or if it's their next MI400, which is where things get really crazy because AMD says this new chip will be 10 times more powerful than their last one, okay, which is a massive jump. And the reason why this matters is because right now NVIDIA basically owns the AI chip market, but their chips are super expensive. So what AMD is doing is really smart. Why I'm kind of going all in on, I have many stocks in this list, but AMD being one of them, is that they're going to be selling a chip that's not just as powerful as NVIDIA, maybe better, we'll see, right? But it's cheaper. And I think cheaper is a big part of these companies that are investing in AI because they do have a lot of dollars to spend, but who doesn't want a better deal? So this is a very massive opening for AMD because some of the biggest tech giants like Google, Meta, Microsoft, they desperately need more AI chips. Like they're desperate. They're ready. They're like, let me get some. We're hungry. We need to evolve and develop AI. So we're going to buy as many chips as we really can. And this is where the huge opportunity it really is. It's really a classic underdog story as well. I'm telling you, do you guys want to buy something that's expensive? Or do you want to buy something on a discount, right? You want to go for the discount. You want to get rich? Go for the discount. Don't go for the really expensive thing, right? AMD is kind of that discount, right? When I say really expensive, NVIDIA, where it's at right now, still a good stock, but you're just not going to double your money. You're not really going to double your money in a very fast amount of time versus AMD, which again, paying attention to risk management, position sizing. We still can't have that much money in it, but the amount that we do have is likelier to make a higher return than some of the competitors that are out there at the moment, just because of AMD not really going up as much as some of the others. Like look at the 1 month, it's flat. All right, so this is really kind of unattractive. The 1 month return is unattractive. The 6 month return is very attractive. It's 59%. So the stock has performed very well, and I think AMD as a company will continue to perform well. Because look, right now AMD is really having their Tesla moment. Just like Tesla shook up the legacy auto maker market with smarter, more efficient, vehicles that were really efficient with their technology, AMD is also lining up in a very similar way to disrupt NVIDIA's dominance in a very similar fashion. So I'm still bullish on NVIDIA, don't get me wrong, but AMD is one of the opportunities right now that's really catching my attention. So a lot of companies will continue to buy NVIDIA, but because NVIDIA chips are kind of priced like a luxury yacht or like a very high-end luxury vehicle, AMD is going to be more competitive and it's going to be taking some market share. And AMD is about to sell more horsepower to the industry, just like basically Tesla Model 3 was very, very good in terms of sales numbers because the vehicle was very cheap. So a lot of people wanted high tech, cheap vehicle with a nice name Tesla. So that's why the Model 3 did very well. I can kind of see AMD kind of being in that similar fashion right now. So one of the catalysts that I'm going to be looking out for is, just really like next earnings and how their cash flow continues to really increase. So that's like the first stock that I think deserves your money. Let's go into the second stock, which I'm going to cover very briefly. And the third stock, Intel, will cover briefly as well. But second stock is Amazon, okay? Amazon's flywheel is accelerating. It continues to accelerate. The company is a high market cap company, but I'm telling you, I'm bicep over tricep. You're gonna make all kinds of money, all sorts and all kinds of money, because Amazon's Q2 results underscored the advantages of owning multiple engines that reinforce each other over time. Amazon has figured out the flywheel. We have another stock, SoFi, in the list. We'll talk about some updates on SoFi. But Amazon's got that flywheel, and actually SoFi is copying Amazon's playbook, not the other way around. You guys know I talk about SoFi a lot. No, Amazon's first on the flywheel. Their net sales rose, by the way, 13% year over year to $167 billion, with operating income climbing to $19 billion. Each of the company's major segments contributed to that growth. Its online store segment saw 11% year over year growth. Other revenue that is primarily driven by Amazon advertising business grew 19% year over year. I'm going to show you real fast my position on Amazon. I got Amazon right here. I got some shares of Amazon. It's currently trading for $228 per share, and I think that we're going to continue to get some steady growth. You can see here I got $343,000 in this position. I have an average cost of $171. So of course, when I bought this position, I told my Discord I'm buying it. So I've been holding this position for a long time. This is an older position for me. I'm just going to continue to hold it, continue to ride Amazon as it basically goes higher. This is a stock that you definitely want to be invested in because of what it's doing with cloud computing business, as well as what it's doing with Amazon Web Services, or AWS, which had really good sales growth. And these pieces, by the way, work together with Prime membership demand and ever denser logistic network supporting retail economics. So while AWS and advertising benefit from growing scale and providing higher margin revenues, the whole business is just absolutely working together and crushing it with higher sales and then just basically higher margins. The margins are not that high for Amazon in general, but for AWS, it is high. So I'm telling you guys, I'm super pumped up. This is a boring stock, but you can make all kinds of gains on it, all right? I'm telling you, don't miss out on it. Don't make that mistake. Now, the next one is going to be Intel. So Intel, we saw some really interesting stuff from Intel. The U.S. government's strategic equity investment into Intel is actually very surprising for me. The U.S. government recently acquired approximately like 10% basically of Intel using the CHIPS Act and Security Enclave grant funds at around $20, $20.50 per share. And that was an infusion seen as both financial support and political backing. So like America, the U.S. government is in Intel. I mean, this deal really marks a rare example of a direct government investment in a tech firm. So, that really boosts investor confidence. I mean, like, what else do you want me to say? Like, it's just amazing. If you look at Intel, stock reacted very positively, of course, because now we have America. We have America behind Intel. That's great. That's very good news. So Intel plays a key role in the U.S. semiconductor strategy. Many view the government stake as a really rational industrial policy, preserving a vital national tech asset. Okay, very kind of like complicated stuff here, but what I basically said was that we want to protect our homegrown companies in our own country, right? In America, we want to be more competitive because obviously we want the dollars to come to us versus, overseas. We don't want Taiwan getting too rich. I mean, we want us to get rich. We want to get richer as a country. Obviously, America is a very rich country. We want to get richer. We want to get to that next level. All right. So that's what we're trying to do. We're trying to preserve our national tech assets and potentially just building more confidence in our own economy, and so those dollars circulate in our own economy. Okay. Now, so that was the next stock, right? We had Intel, we had Amazon, and we had AMD. The next stock, which is really very popular stock that I've been covering for a long time, SoFi, right? SoFi is doing incredibly well. We're reaching all-time highs on SoFi. The last month, we're up 20% on SoFi. The last 6 months, SoFi is up 77%. And I made a video not so long ago. I said, beware, don't make the mistake. And the mistake is not being invested in a company that has such strong and fast growth, especially in their members, right? So the members are just growing like gangbusters for SoFi. Like, we're just making money literally from the new members joining SoFi, but also they're just really exceptional at their cross-selling flywheel. So SoFi Super App Edge, I'll call it, right? So look, members, I said this before, but members that have multiple products, they end up being extremely valuable. Because it's one thing to just like sign up. Like, there's a lot of people that will go to a free Discord and they just like kind of bounce around. But someone, for example, in my experience, when they sign up for coaching, right, they're like, I want to go deep. I want to get big results. I want to actually work with you. Those are the type of people that end up achieving a lot of things, right? People that go like all in. They're not just like tippy-toeing. They're not just like dipping their foot in the pool. Like, let me go for a full swim. So that's like the same thing with basically everything in life, and that's what happens with SoFi. It's the customers that come in and say, we like these products, we're gonna create a good relationship, and we're gonna adopt, loans. They're getting loans, but they're like, I'm gonna take credit cards, I'm gonna invest. They're doing a lot with SoFi, and that makes the lifetime value really high. So this is like a very interesting topic for me to discuss, and one topic that I personally love is like business. I studied business and I love business. So for me, it's very interesting to see SoFi and understand their business on a deeper level. I think the way that I'm analyzing it is very unique because I'm not just looking at member growth, because member growth is obvious. Everyone knows they're growing members, but how are they actually monetizing those members, and what kind of value are they creating from those customers, from those customer relationships, is something that I'm personally looking into. And that's why I'm saying, like, we can go all in. Obviously, position sizing matters. We need to have 10 positions, but we can go all in on our 10 positions. One of those positions being SoFi. They have a very sticky business. SoFi is steadily converting loan users into high margin products like credit cards, the brokerage side of the business, as well as insurance. And that's as sticky as it gets. That's as sticky as Amazon Prime. And Amazon Prime, again, same thing. Like, once you're in, you're kind of in. So let me explain it a little bit further. The Amazon Prime of money is SoFi. So owning one SoFi product is like buying a single book at Amazon. Right, you buy a book, but then you have a relationship now, right? So you have Amazon Prime, and you're like, well, let me put my membership here to good use. Let me get another book, and then that's just how it works. That whole ecosystem just develops for customers because now they're just buying, multiple books at the bookstore. So you get that multiple product effect, and that's exactly what SoFi is doing. So look at membership growth. They added over 850,000 members, totaling 11.7 million users. And those users are adopting a lot of new products, guys. They're adopting products like nobody's business. They're like, let me get that. Let me get just a lot of adoption. That's what it's all about. So I see SoFi as a really strong infrastructure play, and it's very unique. It's very, very unique as a business. And again, my last video, I was talking about vertical integration. Let me explain that real fast. The reason why I'm invested in SoFi is their vertical integration is very strong. So they don't really have to partner with banks to hold deposits. They are a bank, right? So they don't have to rely on third-party APIs for payment or compliance. They're doing a lot of things internally, which saves them a lot of money. So SoFi is very different, and they own the entire financial stack. So it's from lending from its own balance sheet, and they're just collecting the full spread, right? So if you look at other companies, they typically rely on other third parties, right, for compliance help, etc. No, SoFi is all in-house, which is amazing, and I think is a very strong company. I said we're going to break $30 billion, and we're right at $30 billion. So so it's exactly as I said, and I can see us continuing to go from 30, 35, 40, 45, 50, and I think 50 is going to be that kind of more threshold where SoFi can get to within the next 12 to 24 months. The next stock that I'm also going all in on is Robinhood. I've been a customer for a long time. By the way, what I'm thinking about doing with my own Robinhood portfolio is I've been actually using a lot of the money from my portfolio. I've been withdrawing, and that's kind of hindered the growth of my portfolio. I've been needing some cash as I am traveling in Eastern Europe, and I want to get a property I've been taking cash out. So I'm actually thinking about starting a challenge by taking $1 million off my portfolio and taking it down to 3, maybe even taking it down to 2, and then building it back up to 4, because right now it looks like my results are so-so. Although my portfolio is pretty good size, I'm not getting as much growth because I'm withdrawing money. I'm taking money out. So if you're a long-time subscriber, I do use my portfolio to fund my lifestyle, and I do live mainly in Eastern Europe. So I do a lot of travel from Estonia to Poland down to Eastern Europe, and even more east sometimes as well. So I do use the funds from my portfolio here. So I'm going to probably drain the account. I'm going to start a challenge where I'm going to show a lot of you guys how I can grow an account quickly, how I can go from something like 2 million to 4 million within 12 months. So if you think that's a good idea, or if you have a different suggestion, if you want me to start at 1 million or 1.5 or 2.5, let me know, because I'm thinking about the challenge that I want to start. Most likely it'll go from 2 to 4. Let me know if that's a good idea in the comment section down below. By the way, real quick, there's a lot of scammers in the comment section below, and there's a lot of impersonators, so please be aware that it's all over YouTube. We do our best to delete some of those scam comments, but there's an ocean of them. So just be careful, but do comment down below, because I will look at what you have to say about the challenge that I want to do. Alrighty, so Robinhood, I think that it's a strong business because they are acquiring customers just like SoFi is, and they're also having their average revenue per user grow. The video that I did yesterday where I covered Robinhood and SoFi, I talked about average revenue per user being at $150, or is $151 roughly per user that they're generating. So again, through Robinhood Gold as well as other products, they are playing the same game where they're collecting customers and then collecting a lot of money from those customers. So I would be invested in Robinhood. And look, stock's currently trading for $109 per share. I said this is a great investment to hold. I think it's going to continue to be a good investment to hold. And I wouldn't even be surprised to see Robinhood go to $200 per share in the next 12 to 24 months, given that 1 or 2 year time frame. Can you imagine doubling your money? You're going to be sitting there on the beach like this, just hanging out. People are going to ask you hey man, how you so chill? How are you not working anymore? You invested in Robinhood. I invested in AMD. I invested in SoFi. I invested in Nvidia. I'm a good investor. You're going to be hands back right here. Maybe you're smoking a cigar. You're good, right? If you're all in on the right stocks and you get good results, listen, you don't got to work. I'm not working. I don't work. And I'm fairly young and I'm not working because I'm a good investor. I invested properly. All right. So guys, really take this stuff seriously. You can actually change your life within under 10 years by investing properly, dollar cost averaging, putting money in your portfolio, and using options to scale. Right now is literally the best time. So I'm telling you, Robinhood is a good investment also because Robinhood Gold subscribers just hit a record 3.5 million users. So I think the technicals are strong. The fundamentals are strong. Demographically, they have a lot of strengths as well. I don't want to make this video too long, so we'll kind of go to the next stock here. But last but not least, there's a lot of analysts that are just raising their price targets on Robinhood. So I think that's going to continue to happen. Sweetgreens is my next stock. Now, Sweetgreens is the smallest position of all these, and the next stock I'm going to cover is going to be a much bigger position that I would invest. But Sweetgreens is an interesting play that I personally put a little bit of my money into. It's not a lot. If I go to my portfolio allocation here, I only have 1,000 shares of Sweetgreens, so it's really not a significant portion. But when I say I'm all in these stocks, I'm still including Sweetgreens because it's one of the stocks that I'm very heavily invested in. I guess not as a percentage of my portfolio, but whatever. Money is money. Hard-earned money is hard-earned money. I put my hard-earned money in Sweetgreens. And the stock has pulled back to a key level where I think we're going to get a very nice bounce. Just look at the 1 month, it's down a lot. This is the only stock that I'm really down on, and not even much because, again, in my Discord, I always talk about position sizing, and if I go on a riskier position, like Sweetgreens, which it is riskier, then I obviously place a small position. So it doesn't really matter that it's down, but I think we're going to get a nice increase on the stock. So Sweetgreens, they're just expanding. They're just expanding fast. So I'm not surprised to see them come down a bit. It's because like there's going to be volatility. They're expanding right now. They're not super profitable. In fact, they're losing money. They're having a little bit of a rough time with same store sales, which is a very important number. When I was studying in college, and I was talking to some of the best investors as part of my internships and my professors and everything, I learned that same store sales is a very important number that investors look at. And then again, when I was working on Wall Street, I would talk to some really good investors and managers, money managers. And same-store sales seems to be a figure that a lot of investors look at, and I don't blame them. Same-store sales is how much more money or less money the same location is making on a time frame, year over year or quarter over quarter. And if it's going down, that means there's less people doing business at that location. So Sweetgreen's being down 7.6%. I was disappointed myself. So I understand the selling pressure, of course, but at the same time, when you take a longer term perspective and you see what the business can do in general, and you see the fast casual businesses like a Chipotle that has done pretty well, like no joke, it has done very well. The market cap is massive. Since IPO, the stock is up a massive amount. Then you start to think that a cheaper stock like a Sweetgreens with a low valuation can really pay off. It can really pay off and do well. So some of the strategic responses that they have made, by the way, after their earnings call, I liked personally. They boosted chicken and tofu portions by 25%. They introduced a $13 salad for loyalty members, which I think is cool because you want more repeat business. So them doing that, by the way, addresses exactly the loyalty or the same store sales issue. So long-term growth thesis still looks really good for me. I think they're going to do pretty well. All right, let's rapid fire kind of finish here. My voice is given out. Archer is the next stock. I think it's a fantastic stock. They're not making a whole lot of earnings, but I think they're going to do extremely, extremely well. And then, so I'll talk about Archer in a video pretty soon. And then the last stock is Shopify. Its operating system is exceptional for e-commerce growth. Social media is growing very quickly, and Shopify is the backbone of a lot of social media. So I'll go into a little bit more detail on a future video. If you like these stocks, I suggest you look into them further. Do your own research. No one on YouTube. I personally think all the other YouTubers are just like making videos as marketing and selling courses and stuff. I'm a coach. I sell something as well, but I have a degree in this stuff. I have amazing results, but I just want to encourage you personally to learn this on a deep level and use the resources I have on this YouTube channel. I have a lot of videos. For example, my 6-hour free course, like the course is better than everyone's paid content. I can assure you, everyone's paid content and coaching doesn't even compare to my free stuff, like my free 6-hour course. So check that out. Do your own research. Learn how to invest. This is the opportunity literally of a lifetime for you to get good at this stuff, make a ton of money, change your life, approach retirement the right way, become retired within the next 5 to 10 years, have freedom, be able to travel, provide for your family, be a freaking absolute monster when it comes to your finances and achieve all the goals that you thought you were going to achieve in 20 years and 1/4 of the time. In 5 years, achieve all your goals freaking fast. I'm here for you to help you. Here's the course that you can watch for free. I'll help you if you need help, but let's make some money together and let's get serious about this stuff.